Good morning, Eric Speecham, and welcome to Charge the Markets on IG Live. It's a mixed morning, at least, for indices. Quiet but negative session in Asia overnight. Some recovery for European indices in early trading this morning. FTSE 100 really lagging behind as we wait for the BOE decision at midday today. We, of course, had US CPI yesterday, which was weaker than expected, but the only real market that gained in the wake of that was the Nasdaq 100. The S&P did finish up on the day. Tech stocks in the US really benefiting, it seems, from that slightly weaker inflation print, although, as many will point out, it's still at 4.9%, which is well above where the Fed wants it to be. Otherwise, it's a relatively quiet start to the session, really, and just the Bank of England meeting is the big event on the calendar for the day. Earnings season very much winding down in terms of its intensity and in terms of the names reporting. So while we had Disney last night, and certainly a mixed report from Disney there with a few signs of caution coming through in the earnings figures, overall a lot of the big names are now out of the way. So it is just that Bank of England decision, and we'll come to the pound against the dollar in a short while. We're starting with the indices, beginning with the FTSE 100 currently trading at 77.52, and that's roughly down on where we were yesterday, certainly off the highs of the session so far. And as we were talking about earlier in the week, really, there's no real change to this progression of lower intraday highs. It's been the case for this market since the second half of April, really. We topped out on 21st of April at about 79.40, and it continues to decline since then. The one comfort, I suppose, for those who think this market should continue to rise is that we have seen a little bit of support come through around the 7,700 area. So that's a potential line in the sand, if you like. If the index can continue to hold that and then push on back above 7,800, perhaps there's the makings of another attempt to push on towards 7,900 and those April highs. Of course, you've got that lower high very much in place now for this index after the record high in February. It had a big drop and then a modest rebound for this market, but one that has faltered to an extent. Nonetheless, it's very much a case that with the price still holding above the 200-day moving average, which is still rising, and you've also got trendline support, it's an argument to say that really this is still broadly looking for a bullish outlook here, I think, in the short term, although admittedly it has taken a bit of a knock in the 150-point decline we've seen since the second half of April. But I think you'd have to see it really back below 7,600 and then really below the 200-day to start to suggest that actually we're shifting into a much more bearish view here. The bulls still probably holding onto this one for the time being. Looking at the DAX, again, this is a market that has found itself, perhaps look at the 4-hourly chart here, you can see since the middle of April how we've just been in this very tight range. Down towards 5,700, buyers coming to defend this level, up towards 16,000 twice really so far in May, but no ability to break above that. We did have a bit of weakness yesterday post the CPI figure, and then it was dip buyers came in, so that's perhaps a sign that maybe there's another attempt being made to push on above 16,000. This index, the longer term view, of course, is that if we get on above 16,000, then all that's left now then becomes these highs from the end of 2022 and the very beginning, the end of 2021 and the very beginning of 2022, around 16,300, which is the big zone of resistance above there. And of course, we're back into record high territory for this index. So a hop, skip and a jump in many areas for the DAX, although it certainly has been a slower pace of advance over the past 2 weeks. And that's not surprising in many ways. You had a lot of dip buying coming through in the second half of March, and then the gains have just slowed down. A slightly weaker euro this morning has given a bit of support to European indices and trading, which is a reverse of what we had in yesterday's session, but not much news to drive this market at the moment. So you can feel the frustration, I think, on both sides that we're not really seeing much in the way of substantial move. But as long as we hold above 15,700, it's hard to muster up even a short-term bearish view. That would have to be lost to suggest that there's any kind of pullback in the offing for this index. And then look at the Nasdaq, which is really, I think, the one where the interest is focused at the moment. We are now, as we see futures for this, pushing to their highest level, a fresh 8-month high for this index. That would take it on to the August high from last year, 13,700 or so is the next big target to watch. A lot of people, of course, focused on the fact that it's the FANGs that have driven the gains in US stocks this year. If you look at the Russell 2000, although it bounced a bit yesterday, it's very much small caps, very much not participating in this rally. The tech stocks are what's driven it, and that's why you had the S&P finish up on the day yesterday, whereas the Dow didn't, because of the different weightings in terms of stocks in those indices. So it's the tech that has driven this one. Many people view this as perhaps a negative sign that the market breadth is quite narrow. It's often, though, the case that the biggest stocks tend to lead the way higher in the initial stages of the rebound, and everyone else starts to join in, perhaps somewhat reluctantly. But while you can argue perhaps for the FTSE, it's certainly a neutral view in the DAX, it's probably guardedly cautiously bullish. For the Nasdaq 100, new high here coming through this morning. So the buyers firmly in control here. No sign of any sustained move to downside beginning just yet. You've got steep trendline support, you could argue, for really coming through, just to prevent any sign of any downside for the time being. For that to change, you'd need to see a move back below that and back below 13,000. That might suggest that maybe there's enough pullback towards the 100-day moving average in the offing. But certainly higher high in February and then a higher low in March, and then we've pushed on to new higher highs and just a steady grind higher. Really, the closest we had to a pullback was in the second half of April, when we dropped back towards that trendline support, and then we bounced from there. So once again, the buyers really doing their best to defend this market. And you can see on the 4-hourly chart there how it's still very much an uptrend in those timeframes. So there's no sign of any sustained turn lower at the moment. And of course, 30,720 or so is the next target in the upside. Beyond that, of course, it really takes us on to March highs, which is a lot higher than where we are now. So it could be that we just see this index struggle over the summer. And of course, we've got the US debt ceiling crisis, which rumbles on the background. It's not really nothing's really moved on that front this week. More talks from both sides, but that, I think, is perhaps the big risk for US markets heading into the second half of the year, is that you get a nasty debt ceiling crisis. It is a distinct possibility, and then you have the US government entering a technical default where it prioritizes some payments over other. That's the kind of thing that could cause quite a bit of volatility in stock markets particularly. So it's just one thing to be aware of as we move into June and July. Moving on to FX markets, not much really to drive things. Chinese CPI overnight following hard on the heels of the US yesterday, which was weaker than expected on the year-on-year figure, and indeed continues to see a decline in the rate of price growth. So in one sense, the Fed's hiking of interest rates has begun to have an effect. The main thing here is that we're just not seeing much in the way of a catalyst to drive markets. Volatility at the moment is lacking quite a bit in FX markets. Chinese CPI overnight we saw was weaker than expected. Month-on-month price growth was just about 0.1% or so. So very, very little price growth in that front. What was particularly, I think, worrying something was the sharp drop in factory gate inflation, producer price inflation, which was dropped by more than expected by some 3.6% year on year, which people are taking as signs of perhaps worrying slowdown in global demand for Chinese products. It could be fed into the idea there's some sort of global recession getting closer once again. So that's why you've got a bit of a risk-off tone, certainly in FX markets this morning. You've seen euro-dollar dropping back to its lowest level since the middle of April, and finally coming back to trendline support, which was last really tested in the middle of March around the banking crisis. But it's still, of course, a pullback in an uptrend. This isn't the beginning of a sustained turn lower. It doesn't look like it at the moment. It's just that we did manage to eke out a new higher high by the 4th of May. We just within a whisker of 110, the highest level seen there since the end of March last year. So a 1-year high plus for euro dollar. Unsurprisingly, a bit of a pullback coming through. The question is now how far it goes. Trendline support is the first thing to watch for. Below that, you've got the 50-day and then the 100-day moving average. And it's worth noting that the 100-day was the area where the price bounced in the first half of March. So that's the first thing to look out for. It's interesting that you're getting dollar strength at the moment, just as US inflation begins to weaken. But I think the concerns about the debt ceiling is just causing general risk off. And in that sense, then you've got a weaker euro in play this morning, something to keep an eye on. Of course, it's BOE day. We're expecting the Bank of England to raise rates by 25 basis points, 12th hike in a row, as inflation, as we saw recently, continues to be very strong. UK both wage growth and inflation remains very solid in double digits, in fact. So that's a clear problem for the BOE, because if CPI for the Fed, for the US, might be well above the Fed's target, with the Bank of England, it's so far out of sight, really. There's a long way to go. The Bank of England just knows that continue to push ahead with rate hikes, of course, risks tipping the UK economy into recession. The big thing, of course, is that this hasn't bothered the pound for quite some time. You've had a very impressive move. The dip buys from 118 to 126 now for the pound against the dollar, and no sign of that slowing down. And while Eurodollar is beginning to form what looks like a more sustained pullback, for the pound, it's just drifting around very close to those higher highs that we saw just a couple of, in fact, yesterday. In fact, that new high, about 1 year high for the euro just last week. It's a 1 year plus high for the pound against the dollar here, the highest level for that since the end of April last year. So it continues to claw its way back from those September lows of last year. And no sign is yet that this is going to turn into anything more sustained. In fact, over the last sort of month or so, we've had pullbacks of 2 or 3 days, but not really turned into anything more serious. So there seems to be plenty of buying pressure to support pound against the dollar for the time being. But of course, it is BOE Day. We are covering that live on IGTV and live stream with DFX. So do watch out for the volatility around that later on today from midday. And dollar yen knocked back yesterday by that US CPI reading, but overall doing its best to move higher again in early trading this morning. And it finds itself in a bit of a neutral position because you've had a big bounce over the course of the last 2 or 3 months, and then we've run out of steam as we're near 138. But we were not back to the 50-day moving average today. But as you can see, perhaps on the 4-hourly chart at least, there is still very much an uptrend in play here that buyers have come in to defend the lows all the way through. And until that breaks, that sequence of high lows has been in place now since the second half of March. So until that breaks and we see sustained move back below 133 at least, I think it's hard to muster up particularly bearish view at this point in time. So we're still perhaps expecting dollar yen to push on towards 138 again and see if it can break above that this time and move on to fresh highs for 2023. And then turning to commodity markets, there's not much to report really in either. Again, I think it's a question of focusing more and more on the debt ceiling issue and expecting to dominate, particularly as earnings season begins to recede. If we're looking at gold, we find ourselves just still modestly down on where we were a week ago. There were signs perhaps of recovery yesterday, even with that strong inflation reading, but then the dollar's strength this morning has knocked it back and just put pressure on us. But as we were saying with the DAX and key horizontal support for gold is the fact that trendline support in the short term from the March lows has yet to be tested in any meaningful way. So if it drops back to 2000 and starts to go back below that, then we'd be more concerned of this turning into a deeper pullback, really. I think at the moment, price action just supports the idea of consolidation rather than anything else. So you've got medium-term trendline support coming through all the way from November lows, and then short-term from the second half of March. So until at least the first one of those, the second one of those is broken, short-term support is broken below 2000, below 1990. It's still the buyers remain in charge on this one as well, albeit obviously prices at a quite elevated level really after its substantial gains from the lows of March. And then US crude, WTI, again, not really showing any willingness to head lower, which is perhaps surprising given gloom around the global outlook that still permeates this market. Huge, obviously, decline in the course of April and into May, but just recovering. And I think as we saw, if you look at the hourly chart, we saw there really a couple of attempts yesterday, indeed into today as well, to push this price lower, but buyers coming in to defend it. So it's hard to muster up that short-term negative view now that the price has recovered above these 250-hour moving averages. So for the moment, it looks like they're doing their best to push this one higher from here, although in the longer term, that's still a downtrend. You're still below the 200-day moving average. You're firmly below where you were, obviously, in April. You're even below the 82 area, which was such a big area of resistance throughout December and into January, February, and March, really. So while that happens, I think we're still watching for any potential turn lower. Certainly, any fresh decline that begins while the price is below the 50-day moving average would support the bearish view and suggest perhaps another attempt to break through to 65 and onwards from there. Alternately, until we get back above 79 at least, I think it's hard to muster a particularly bullish view on this one. I think it needs to be just watched carefully because the likelihood is, I think that perhaps if you get another bout of risk off, if the debt ceiling crisis explodes, you might see the dollar strengthen on safe haven demand more than anything else, and that would likely drive commodities down and push oil lower once again. So that's probably the thing to watch out for more than anything else at this point in time. So looking ahead to the rest of the day, it's the BOE at midday. Bank of England expected to raise rates by 25 basis points, as I say, for the 12th time in a row. So continuing to tighten monetary policy, although at a fairly cautious pace. Otherwise, it's also US initial jobless claims at 1:30. Otherwise, expecting the Dow to open around about 40 points higher from yesterday's close. But we'll be live on IGTV with the BOE decision from about 10 to 12. So do join us for that. But that's it for me. Thank you for joining us. We'll be back as normal tomorrow at 10:30.